I want to thank you for taking the time to meet with us. And so the purpose of this meeting is just to bring some matters to your attention that we've discovered thus far in our audit work, and then just keep you up to date about the progress of the audit so far. So here's the agenda we have, along with a couple exhibits. And we're just going to go through these in detail, and we can start off right away here with Cameron and Dylan.
Right. Well, with your recent hiring of your new CFO Tanner and COO Lopez, your HR policy says that you need to have a full background check within 6 months. And right now, we only have the preliminary checks in, but there have been no red flags. So that's pretty good news. It's not a terribly urgent issue, just as long as within the 6 months, if we can get the full background reports in, that'd be good, be consistent with your policy.
Really, the important issue here is just adhering and being consistent with your internal policies. Like Cam said, there aren't any red flags in what we've discovered so far, but you should try to get that done as fast as you can. But we know that there's been a lot of turnover and your HR department has been swamped. But like we said, there's no red flags, but just more or less for keeping up appearances and being consistent with your own standards and policies.
Okay. Noted. We'll take it on the advisement.
Awesome. So we'll move on to the next topic, which is some couple journal entries that we've discovered. So we've found through our audit of accounts receivable and contingent liability that there are a couple matters that we want to address. In our opinion, we believe that these should be addressed now and rather than later. So Casey and Dan can detail these out further for you.
Yeah, the first one we found during our testing was an understatement in the uncollectible amount. It wasn't as significant amount, however, it should be taken with a serious note. While it presents not as many issues, could present a problem with the control and the IT procedures.
Absolutely. We realized that this is just a small amount. It's only $34,500, and we talked to some of your staff, and they said it was just an issue with your controls, and that usually they catch these glitches, but apparently for some reason it didn't this time. We do need you to make the bad debt expense entry, just to follow protocol. While it's not a huge amount, it won't do anything big to your financial statements, just to keep in line with protocol. But our biggest recommendation right now would be go back and look at that control. If it's not catching these small errors, it could lead to a bigger problem further on.
We don't want that to happen.
We absolutely do not want that to happen. It just requires more work out of us and out of you guys, and it just seems to be better if you guys would go back and just look at it. It won't take much time, and just figure out why that error occurred.
I agree on us that we going back and maybe re-looking at some of this, but just booking and requiring us to book the $34,000 seems so small.
It seems small, but you definitely want to follow the protocol, and according to the AICPA and PCAOB standards, you have to book that bad debt expense. You have to. Unfortunately, it seems like it's not a big issue, but if you don't follow smaller standards, it could require investigation from the SEC and
potentially lead to a bigger problem, snowballing, and then lead to certain investigations. We want to just make sure that your financial statements are correctly stated for all of the investors out there, and that we don't have any problems with that issue.
I think the biggest concern the amount to me, I don't care about $34,000, but we're talking about extra work because of the control issues. What exactly does that mean?
Well, it's more work for your team rather than ours, because we will check your controls. That's part of our job as your auditors. We go in and we check the controls and see if they're working properly, but it's not our job to fix them. We can give you recommendations, but there are certain independence issues where we can't fix them for you. So that's more work for your team, which it does seem like something that doesn't seem like a big deal right now, and you may not want to do it. However, if by postponing it, you may have bigger issues in the future, which could mean a lot more work for your team, and something where the SEC might come in and say, why aren't your controls working properly? You can misstate something that's material.
And another big issue would be the contingent liability, that the complaint of $500,000 is both probable and estimable. That's also an example of how you need to book an entry to make sure that you comply with the accounting standards, specifically 450-2025. The council has suggested that it's both probable and estimable. And according to the standards, it is required to state that in your financial statements.
What is 450-2025?
It just basically outlines loss contingencies. Very simple. Yeah, it's in Exhibit A. If you take a look at that, it basically just states that if it's probable and estimable, that needs to be recorded in the financial statements for a proper opinion to be issued.
Yeah, no, I know we feel a little different about this issue. We feel pretty strong about our position, so maybe we'll table this one and regroup on it.
That would be.
I don't feel our exposure is quite as high as our external counselors saying, so we just need to complete the inventory.
We understand we could probably put together a task force together that could jointly tackle that issue. But we do feel that it is a very important issue and we need to treat it with
Yes.
the correct severity.
And unless we get another qualified opinion that's equivalent to what your council gave us, it's going to be an issue that we need to book before the audit's open, before we give a qualified opinion. Okay?
All right, great. So now we're going to talk about the structure of the audit committee as a whole. So this is a very important part of the audit process because this is who we communicate with throughout the audit as a whole. There's a lot of rules and requirements that go into how it should be made up. And we feel that, in our opinion, in our experience, when it's structured correctly, not only does it make it you guys compliance legally, but also it makes our job easier. We communicate most effectively and efficiently when it's structured correctly. So Cameron and Dylan are going to run through some of these requirements and give you some of our recommendations with regards to this.
And when we were looking at the makeup of your audit committee, we saw that there is a definite conflict of interest for both you, Cordelia, and Kim,
Really?
in that since you're the CEO, you're paid in excess capacity other than your role as an audit committee member. And since Kim derives 30% of Rock Media's revenue from Fox Corp, she also has a conflict of interest. And Section 301 of Sarbanes-Oxley requires that all audit committee members be boards of directors and they have to be independent.
If you go to Exhibit B, we would kind of lay out bullet points, just what Cam was saying. And basically what independent means, it means that the people on your audit committee aren't deriving any compensation besides their services as an audit committee member. And with you being CEO, obviously you're being paid to work for the company. And with Kim, like Cam said, deriving 30% of his revenue from Fox Corp, and that's all obviously the conflict of interest. Caesar, you can stay on the audit committee.
That's one of us.
However, the SEC requires there to be at least one financial expert, and it seems like your background is mostly in dogs and communicating with them.
I run my own business.
You do, but we really need to have someone that has a little more experience with generally accepted accounting principles and going through audits.
And off what Dylan was saying, we identified 3 current board members, Dale Martin, George Alheiser, and Carla Thomas, that we believe have financial expertise and they've gained, literacy of financial statements through experience. I know Carla was a treasurer for a very long time, so I feel like these people can really bring extra expertise to financial knowledge of your audit committee meetings.
So it sounds like I can warm the chocolate bar.
I wouldn't use that phrase.
And Caesar, if you stay, we need to make sure we get a financial expert.
I don't understand all those 405, 25
Yeah, I know
estimate
either.
stuff.
Yeah, I'll defer that to you all.
That's what
Okay.
you're for.
And how soon do you have to remedy this situation, would you say? Can we get through this next year and audit?
No, I would say hopefully by the end of next quarter, as soon as possible. Just because right now we're currently in violation of Sarbanes-Oxley Section 301. So it's something that you definitely need to work on as soon as you
Address
can.
more urgently than slowly.
Right, in our opinion, it's just something you don't want to put off. It's easier to address it sooner rather than later than cause issues with the markets and the SEC later on. It's just something that we, in our experience, if it's taken care of quickly, there's no problems. All right, so Douglas Tanner, CEO or CFO, asked me to talk about the audit fees with you guys a little bit, or the increase in the audit fees a little bit. As you guys know, the acquisition of Bow Wow has caused a lot of extra work for everyone at Fox, and that includes our audit team too. Our original fee and budget were based off the idea that this acquisition would not occur this year, so we've had to do some extra audit work with regards to the acquisition. And our Casey and Dan have done a lot of the work here, and they can detail out exactly what.
Just to outline that additional audit work that needs to be done because of the acquisition of Bow Wow, the 4 new warehouses that Bow Wow brings on to the team. Also need to go through an inventory count and some work needs to be done concerning those plants on top of Fox's original inventory and those warehouses. So that's one issue that needs to be addressed. The second one would be the goodwill that comes on with the acquisition. A lot of due diligence work needs to be taken care of both by our side and your side, to ensure that we properly represent the financial statements.
Yes, and I'm a staff member, I'm a senior staff, so this is something that would be more my busy work. Just to give you kind of an idea, when you have an inventory count, it usually takes a full day, maybe 2, and 1 to 2 staff members. Besides that, once you do all 4 inventory counts, you go back and go over everything you've gone over. That does take some time. We're thinking we're going to need a couple of additional staff, just considering the workload we already have with the audit team on Fox's Corporation, 1 or 2 extra staff members who are able to take on some of these extra works and possibly a specialist dealing with the goodwill would be the best situation for all of us, for us to bring you the best possible work. We're really excited about the acquisition. We think it's great. It's a great new company to learn about, but we want to make sure we do it right and we're detailed in our first year audit so that we don't have any roadblocks along the way once we get underway with everything.
So I'm hearing that there's some increased work, one or two people for warehouses, and that sounds like, I don't know, do some math here, but, so there's that, and then some goodwill, but maybe together, we've not had to deal with that in the past. So, do you all have a proposal, or what are we looking at?
Yes, so with those extra resources and manpower, it looks like our budget's going to increase by about $250,000. And yeah, it seems like a lot. In my experience, it's the first year of the acquisition. It's this extra work that we have not planned out. We had not planned originally. So we want to do our due diligence and do the biggest audit quality. And as always, we're open to discuss this further with you and answer any questions you may have and detail it out a little more.
I think, so, the fee seems big. Maybe I'm not understanding the link between the effort and the fee, but you also mentioned something about having a specialist for goodwill. What does that entail?
It's just to make sure that someone comes in and makes sure we're doing the work correctly for an acquisition. They wouldn't be here for the entire audit, but when some of our staff members, we might have a senior staff, we might have the manager look at some of the specific goodwill and make sure that we account for it right on your financial statements and that you all are accounting for it right when we check that. It's just someone to come in and explain everything to you all in detail to make sure that you understand how this is affecting your financial statements. If anything's improperly stated, that's what they're here to explain to you and to explain to your accounting staff what that means. This is a great acquisition, but you want to make sure you account for that right and that your accounting staff also knows how to handle that.
I think I want a little bit more detail and transparency behind, your comment. Thanks, guys.